This is a new series for Tearsheet. In the past, we've done a lot of online conferences. This time it's going to be pre-recorded, but with the same powerful, deep content that our readers and our attendees are used to. I'll be joined today by Renaud Laplanche, co-founder and CEO of Upgrade. Renaud is actually one of the first people I've ever interviewed for Tearsheet. This is going back to his time where he was the CEO at Lending Club. My beard keeps getting longer, and Renaud just keeps founding unicorn companies. He's got a knack for that. At Lending Club, Renaud pioneered consumer fintech and grew the company to be the largest provider of personal loans in America. I know he's also an avid he's an avid sailor. Can you say that? And a frequent guest lecturer at Columbia Business School. We're going to be talking about how product innovation can help consumers simplify their financial lives and save big. Welcome, Renaud.
Thank you for having me. And my hair keeps getting grayer.
we can plot our aging process through our podcasts over the years.
That's right.
So let's talk about this. I mean, in the intro, we talked about you founding Lending Club. To me, in my mind, when I plot fintech, 1.0, 2.0, however you want to describe it, I think Lending Club is a pivotal, seminal company in sort of how I describe the maturation of the industry. And now you come back again at Upgrade. So let's talk about what is it about consumer lending that encourages you to keep coming back and keep starting new companies and keep creating new products?
Yeah, and I agree with you that the history of these two companies, Lending Club and Upgrade, tracks really well. So the evolution of fintech over the last 15 years. With Lending Club really being part of its version 1.0 of the industry, where we were sort of taking on the banks and really doing so by trying to be better than the banks at one particular thing, right? We were small startups with limited resources fighting giants. And
what was that one little thing?
And so that one thing was personal loans online, right? And it's not a little thing; it's a big market, but it's one product. And many of these early fintech companies were focusing on one product like this, and SoFi was the same, and Prosper, and it was all either personal loans or student loans. It was doing that one thing better, and then really concentrating resources that way. And I think you've seen an evolution where, like Upgrade, you've seen more of this neobank movement emerging, and really a lot of diversification of product and addition of new products to the mix. A lot of product innovation, but also trying to get a better picture of a user's financial situation by offering these different products. So if you have a bank account, that gives you additional data to underwrite a consumer, to better service the loan, and there are cross-selling opportunities, and the economics get more efficient. So there are a number of benefits in expanding the products and services offered to users.
Was that clear to you at Lending Club that the new products gave additional, as you were building it, because I know Lending Club also, expanded horizontally, about the benefit of the value of new data around your customers as you launch these new products?
I think so. I mean, it's always, it's kind
easier
of
in hindsight. Yeah.
Point, right?
Yeah.
When you look at it from a few years later, but I think it's how much you incorporate that, right? Because that's one strategy. So going deeper into consumers' finances, getting more data, getting more cross-selling opportunity. Another strategy that we implemented at Lending Club at the time was, hey, why don't we broaden the user base, right? So we have consumers, now let's do small business. And that's almost the opposite strategy, right? There aren't a lot of synergies, there aren't cross-selling opportunities really. So you get more potential customers to play with, and that's also a decent strategy. It's just different. And I think what we've seen is the winning strategy on fintech has been to go deeper, get better data, get more cross-selling opportunities, rather than going broader. And you really haven't seen a good example of fintech company that's successful in both consumer and small business, for example.
Yeah, I can't think of any. And those that were participating on both sides typically drop one over time.
That's right.
Or even drop the direct to business or direct to consumer and just turn into a platform. But let's talk about Upgrade. And where was the blue ocean opportunity for you when you were thinking about launching Upgrade?
Yeah, so we thinking of like how much good we do in the world, or we try to do. I mean, personal loan again was a great product. It really helps consumers pay down and refinance their credit card balance at a lower rate with monthly payment, fixed rate, more predictability. It's a more responsible way to handle your personal debt than credit cards. That's revolving and then keeps revolving until you do something about it. And that created this like $1 trillion in credit card debt. That's very expensive for consumers, a very high rate, lots of fees, and really doesn't amortize down every month. But so at Lending Club, we did like tens of billions of credit card refinancing, maybe like at the time I left, probably about 50 billion. And the total credit card balance outstanding for consumers in the meantime went up from 920 billion to 980 billion. So we couldn't refinance credit cards faster than people were charging them. So we really didn't make a dent into the issue. It's another way to say it. So at Upgrade, we said, okay, personal loan is a great product. Let's try to do more. Let's move upstream and let's create a credit card that would be a better credit card, one that sort of amortizes down every month, that's sort of fixed rate, fixed monthly payment, lower cost, no fees. So one credit card that you never have to refinance, and let's tackle the issue this way. So I think that was really the beginning of the thinking of, okay, personal loan is great, let's add credit cards, and then let's add mobile banking to the point we made earlier about getting a more holistic view of consumers' finances and getting more data and being able to serve them better.
I think that was one of the interesting things for us when you were launching Upgrade was, prior to Upgrade, a lot of firms started with the core, like sort of plain vanilla banking solution and then added in a card later. It was very clear from the beginning you wanted to be a lender. And you did it with this OneCard, which is novel in the sense that it combines facets of being a debit card and a credit card. Maybe you could describe how that works and how OneCard fits into that ecosystem that you were describing that you've built around it.
Yeah, I think it's really sort of product innovation at its best. It's so OneCard is really the only card you can use for both what's supposed to be debit expenses and what's okay to be a credit expense. So you can sort of pay for all your expenses, whether it's sort of everyday or recurring charges that you shouldn't be taking credit for, or a larger item where you want to spread the payment over 6, 12, or 24 months. So you can do both with one card, and you sort of toggle pay now or pay later, depending on whether you want the expense to be debited from your bank account or really use it as a credit line. And you can set some rules and say everything that's more than $100 or $200 paid now, so less than 200 paid now, more spread it over 6 months. So it's also a great budgeting tool. And I mean, we always like to each product innovation to have at least 2 benefits. So one is convenience. The other, in this case, is because of the way the card is built, it's actually a credit card at its core. So we earn credit interchange, not debit. So it's another 100 basis points that we can use to sort of increase rewards for consumers. So it's also a way to get credit card-like rewards, so 2 or 3% cash back, even on sort of everyday sort of expenses that you would typically pay with a debit card and wouldn't get this kind of rewards. So it's really a combination of better convenience, having a single card, single statement to look at, managing your expenses the right way, but also getting more rewards along the way.
And how it fits into the Upgrade ecosystem. So somebody signs up for a card. Is that typically the entry point for a new customer? And then they're introduced to banking and personal loans? Maybe take us through sort of the interplay between the different products.
That's right. So it's really a way for us to sort of increase the the penetration within this sort of user base. So instead of these two products, like mobile banking on one side, where you have your sort of debit card and your daily sort of day-to-day expenses, and the credit card that you're only going to put up for larger expense on a spread over time, you really get both at the same time, right? So it's in business model term, it will be like instant cross-selling, but I think the benefits to the users is really there, and it's getting us more data. More data coverage about our customers, and again, an ability to underwrite them and service them better.
So I like the fact that, I mean, in both Lending Club and in Upgrade, you really innovated a new product. It was a takeoff of existing products, but done in a new way, whether it's peer-to-peer loans, which was a huge problem to solve, eventually turned to marketplace lending as well. And here, like you just described, credit and debit seem to sit on, they're just two separate products. As an entrepreneur, how did you decide to kind of slay that sacred, cow to say like, well, maybe we can combine these together? What was the thinking and the impetus there?
Yeah, so I think when you want to innovate, you always start from the user, right?
Mm-hmm.
I mean, what makes sense from a user standpoint, and very often companies and entire industries think in terms of their own infrastructure, how they're organized, what makes sense, like in terms of like right. product lines, and like with different people responsible from different products, and silos. They all have their own right. incentives and their own bonus that's tied to a specific number. None of this makes any sense or adds any value to consumers' life. So I mean, we often a way to do this is often to like take a step back and say, hey, forget everything that's been done before. If we were to design it from scratch, what would make sense in that case? And again, there's really no fundamental reason why you would use a different card for debit and credit. Just the way, just the way the payment rails are organized. So why not simplify it for the user? It adds a little bit of complexity on our side because we need to make both work. But I think it simplifies our users' life quite a bit.
So there's the customer centricity to be able to think about it in that way. And do you need to? Is it harder to do if you're within the industry? Meaning, if you're used to working in a bank, and as opposed to somebody like yourself who's a technologist just thinking about best experiences for customers, is there something about coming from the outside inward?
Well, for sure. I mean, that's such a great point. I mean, it's I mean, when you've been doing the same thing over and over again for 20, 25 years, it's harder to challenge it, right? I mean, a lot of things become like sort of assumptions that are sort of hard to challenge. So I clearly had this benefit of not being burdened by knowledge and sort of coming
not just legacy technology, but legacy thinking. I heard somebody say once.
Right, yeah. Exactly. And in a couple of ways. I mean, one being sort of more of a sort of technologist, and the other, frankly, when I started Lending Club, is being a pretty recent of immigrant in the US and not being really sort of aware exactly of a lot of things, which really helped me in a way be more creative.
Appreciate that. So what do you think is next for the lending space in terms of product innovation, if that's the way in to like sort of unlock new opportunities for customers and new revenue streams, like for Upgrade? Like, what do you think is the next thing on up ahead?
Yeah, so I think there's I mean, we're continuing to innovate in a way that really delivers value to consumers, and then again, the value very often, I think Silicon Valley has been guilty of focusing more on experience than value, and like what I call designing products for rich people who sort of are busy and want a better experience and something simpler and faster. I think what a lot of our customers care about is the value more than experience. Experience is important, obviously. You don't want to create friction, you want to simplify everybody's lives, but being able to put more money in our customers' pockets is, I think, is a higher goal, frankly, than just an experience improvement. So I think we also keep that in mind when we innovate. So we look at industries that have not been very efficient, where there's a lot of value that we could sort of provide to consumers. So we recently launched sort of home improvement loans. We are launching we recently launched a sort of auto product as well, auto loans. So these are like focusing really on like big expenses, things that are like quite sort of necessary, like the auto loan, really sort of a pillar of many people's sort of financial life. If you lose your car, you might lose your job, and everything falls apart. So we're really trying to focus on sort of occasions, opportunities, expenses that really matter for our customers.
Got that. And I want to go back to something you said, Renaud, about Silicon Valley, about designing for experiences for rich people. What do you think is one thing leaders in fintech, particularly in lending, could be doing right now or should be paying attention to?
So yeah, I think, I mean, right now, I think there's the bigger issue is credit, right? I mean, it's credit performance, credit quality. It's been a really choppy environment with rates, interest rates going up very quickly, inflation going up quickly, now subsiding a bit, but still being higher than usual, and all that has put a lot of stress on consumers. Thankfully, the job market has held up really well throughout all that, but that might be the next shoe to drop, right? I mean, I wouldn't be surprised if all the rate hikes end up having some impact with a time delay on the economy. And so I think there's a lot of optimism for a soft landing. I don't think it's in the bag yet. And I think being very prudent on credit quality is really important. And the credit performance in this sort of this crisis, this slowdown, has been very different from 2008 or from any other crisis, in the sense that here it's not been, again, so far it's not been people losing their job. It's been people having like harder time making ends meet because the price of everything has increased so much. So I think there's more in these circumstances. There's more you can do in terms of like servicing, in terms of modification plans, in terms of like reducing the monthly payment a little bit to like help smooth things over, as opposed to pushing consumers into default. So I think this the last 12 to 18 months have been a good test on servicing system and servicing flexibility and the ability for lenders to sort of understand the market we're in, the economic circumstances we're in, and really work with our customers to all get to a better place.
That's interesting. I'm curious what you use as, there's so many different things going on in the business. Obviously, there's the aperture, the lending aperture, and then there's the credit quality of the portfolios that you're managing. What do you use as KPIs or as a North Star within Upgrade to see how good of a job you're doing? Like what do you use as a management ratio or something?
Yeah, so I mean, in terms of credit performance, I think we have very granular metrics of performance, very early detection of problems in a given vintage. Because with credit, I mean, very often you like look back like several months, right? It takes a while for credit performance to really unfold. So we've put in place, I think, more reactive indicators, and we look not just at 30 or 60-day delinquencies, but look at 5 and 15 days delinquencies. And And so look at prepayments, obviously as a good indicator as well. And I think one of the benefits of mobile banking, as I said earlier, is data, right? We can see what's happening in our customers' lives, based on transactional data in the bank account, faster than anything that gets reflected into credit performance weeks or sometimes months later. So having that transactional data, better understanding the full financial picture for our customers has been really helpful and really helped us get great credit performance over the last few months.
What about on the management side? So that you talked about, delinquencies on the credit portfolio, but what about where you sit as CEO? Like how do you view how the company is doing, like in terms of metric?
Yeah, so when you decide to become like a multi-product platform and really mobile banking and offering more products to consumers, obviously the satisfaction rate is really key in a number of ways. One, it's our own customers reviews and ratings online impact the reputation. We have a pretty active referral program where existing customers refer other customers. Obviously, we measure number of products per customer. So all these metrics are really derived from the satisfaction rate, and how much users just use the product, right? That's monthly spend on debit card, on credit card, monthly deposit. All these metrics really are an indication of are we getting more, like a greater share of our customers' financial lives, or a smaller share? So we look at this very closely in terms of satisfaction metric. We like to use NPS, Net Promoter Score. Our NPS right now sits at 77, which is very high. We're very proud of that metric, but it's something that takes work. And I like NPS as a overall even company performance metric, because you need everyone to perform, right? It starts from product design, which involves designers, product managers, engineers, legal and compliance, are really like part of product innovation at Upgrade and product design. But then all the way to marketing, how the product is sold is going to have an impact on setting expectations and eventually on satisfaction rate. And is there a gap between these expectations and what we delivered for the product? And then the entire servicing operations. We have 850 people in Phoenix in operations, who are very dedicated professionals who really continue to enhance that experience and live up to that high NPS score.
And I've appreciated this conversation around product innovation and how that impacts really serving customers in financial services. What's next for you guys at Upgrade in terms of new products, or how you think about products in the future?
Yeah, so we want to continue to make a difference in our customers' lives. So that includes continuing to develop products that tackle expenses that matter, investments that matter. So we help our customers buy a car, refinance a car loan, make home improvements, manage their day-to-day financial lives with debit and credit card coming into one with one card. I think that we'll continue along this path with probably continued integration of payments and credit product, because I think when you combine products, there are always opportunities to squeeze one intermediary in the value chain and generate more margin, which is more value for consumers. Help us lower the price of our product, both rates rates start coming down, but also continuing to deliver no fee product, which only can happen if we operate efficiently. I think we're really sort of very focused on that, on like sort of delivering more value to consumers, putting more money in their pocket.